Okay, let's talk about what potentially can happen this coming week, um, which is the end of the year and end of Q4. It's the final week, and what I have here is a side-by-side comparison of the last, oh, well, not the last, but the Q1, quarter one downturn ending in March. Okay, so essentially it's the end of Q1 2021, and this signature that I am showing right here as a comparison or as a benchmark is very similar to what you see um, currently for the end of Q4. And I'm using Amazon because this is my preferred instrument for trading. And the first signature you should notice is obviously the downturn in March during this period was much more significant. You can see it's going from 2431 all the way to 2900. So we're talking about over 500 points worth of decline as far as what we call peak to peak, so or level to level. And so when we're going from peak to peak, level to level, you expect an oscillation. As you see here, this is an oscillation before it either go up or go down. And of course we know that it went up. This is of course Q4 that we are comparing the current signature, and we're going from peak to peak as well. This peak to peak, we didn't see it testing the 3300. Instead, we saw more of a tail baseline, right? So this baseline right here with these four tail, meaning that there was support at this level. Um, I'm not 100% sure that qualifies peak to peak. So there's potentially another downturn that might result in something like that, and that would be peak to peak, right? It might even go down to this level, right? And that would be 3750 all the way to 3200, and that would be 550 points, very similar to this peak to peak. This is also 500 and around 550 points. So at this moment, I am inclined to think that might be the case, only because um, this 100-day moving average is rather, it hasn't turned down yet. And I think, based on what we see here, based on what we saw not last quarter, but Q1, I think there's a chance of another oscillation down. And I think Monday definitely would kind of tell the story whether the oscillation will go down or it might go up, right? It's really sitting right at the 100. If you look at it closely, it's sitting right at the 100 on a daily, right? And you say, well, it went up and tested the 20 and the 50 and it failed. So you can see that clearly that it went up to the 50 and the 20 and it failed. And then it tried again to the 20 and the 50 and it failed. So that is two failures of going above the short-term trend line. 20 and 50 days moving average or short-term trend line, 100 and 200 or more long-term. So it's right at the 100. So they might attempt to break. This is the weekly. So I don't want to look at the weekly. I want to look at this the 60 minutes. So I just pull up the 60 right here. You can see on the 60 minute, it is above the 60 minute. So you can say, well, it's going to try to fight and stay above the 60 and break above this key level right here. This key level where you see these upper wicks on these candles, 1, 2, and of course this guy. That correlates with these upper wicks on these candles as well. So you're at a point technically where it can either go up or go down. My inclination is that I think it will go down. The reason why I think it will go down as opposed to going up is because I have a feeling that the downward pressure is more due to the fact that I don't think the holidays numbers, the Christmas spendings and activities, consumer spendings. On top of that, I think the inflation pressure, the end of the year selling, the Omicron virus, still being running through and causing fear amongst consumers and retails and the holidays, Christmas. Plus, it's the winter months, so economic activities or consumer activities is a little bit pressure at this point. End of the year selling, plus the fact that what was the other? The inflation number is still relatively high, and the Feds are planning on reducing their purchasing of their promo purchasing or increasing the interest rates starting next year. I think the chance of it going down is higher than going up. And if you look at this previous decline in March, the two things that favor it going down is the fact that this is a peak to peak. This is a really, consistent peak to peak or a benchmark peak to peak. This isn't really a peak to peak, in my opinion. It can qualify as a peak to peak, but this peak to peak definitely is more pronounced. And of course, on a peak to peak, you see this oscillation. And on this peak to peak sell off, you can see the 20-day moving average actually got tested again, right? Not 20-day, 200 days. The 200 days moving average got retested. One attempt and then another one that actually penetrated a little bit or undershoot it a little bit. Here, you can see that's not a peak to peak, and this is not a peak to peak. And yes, so they got 3 failure of the 200. A consistent baseline that is right above this 38.2 Fibonacci or above this 3300. I think there's another test of a 200. That makes the most sense to me, given that this McCullough oscillator, you can see this McCullough oscillator is still on the negative side. Anything below this median line is on the negative. This is more positive. You can see this McCullough oscillator that we are benchmarking in March. This is above the 50, so this is more. This signature right here is more positive than this signature. Granted, I drilled this in, so that's not the current data, obviously. This right here, So I may be wrong. I may say that there is definitely a chance that Monday you will see a attempt to break this. I guess these wicks right here on the 60. So there's a chance of that on Monday. If it fails, definitely if it fails on Monday, this thing is going down to the 200. There's no way around that. So if Monday, I may gamble and see if they try to break this on Monday, but I have a feeling that they won't even give you a chance that it's actually going to gap down. And if it gaps down, that play toward this no longer apply because a gap down implies that there's going to be an initial attempt to, let's look at this guy right here. So now, technical analysis is really simple. It's really more simple than you think it is in the sense that I'm going to save this as a temp or something random, just in case I need to go back to it. But technical analysis is actually really simple, right? It's all statistical analysis essentially, right? And based on patterns, repeating patterns is what, really what technical analysis is. We know that we have these peaks, and these peaks correlate to these peaks. And we know that these peaks are right here. So these are these wicks. So we know if it gaps up and it tries to break it and it fails, that scenario obviously is going to result in a failing pattern. I mean, that's just statistical analysis. That's just technical analysis. However, if it gaps down, right here, and then it goes down because you got the typical morning push. So if it gaps down and you got that morning push, well, this signature or this behavior, these two behaviors, these two outcomes are completely different, right? You can't say that, okay, you got a gap down, you got this morning push, you got the afternoon recovery that went all the way up, and now that is exactly the same as once it goes up to this level, these two are identical. No, it is not identical. These are completely different patterns. These are completely different signature. You can't say once this goes here and it fails this, that it's gonna go down. No, because it starts at a much lower level and you got this huge upswing, it might do something like that, right? This right here is more powerful statistically or in technical analysis of a chance of a sell-off and some kind of recovery and an additional sell-off that leads all the way down to this 200-day moving average, all the way down here. That signature is what I'm hoping for. If you get this signature, well, it's a different. I have to reassess it and see how it plays out, right? This signature is what I'm hoping for so that I can buy some puts. And hopefully, once you got these failure right here, once you have this failure, it's pretty clear cut that it's gonna touch the 200 in my opinion, right? So that is exactly what I'm hoping for as far as was to play on Monday. So that is my analysis for Amazon. Let's just go through right now. I think we can just go through the top, look at the index first and see if there's anything. And I'm going to highlight the 100 just to do a easy benchmark and see how that looks in the index. And here's the NASDAQ. The SPY, the Dow Jones, IWM, semiconductor, and biotech. Notice how these signatures are kind of similar. It's really funny in my opinion. Let me see what gold look like. Yeah, gold is actually stronger right now. But they do have a very similar signature in the way they're behaving, which is kind of funny, right? They do look very similar. So I'm not exactly sure. Let's just look at the top stocks the biggest. We'll just highlight the 200-day moving average right here. Microsoft. Amazon. Tesla. Google. Facebook. Nvidia. Tencent. JP Morgan. The SPY. Home Depot. Walmart. Bank of America. MasterCard. ASML. Pfizer. But let me throw in Disney. Some of the other guys that I don't actually have on this list. Disney. Nike. ExxonMobil. Broadcom. Netflix. Identical. Yeah, I don't know one way or another to determine statistically if it does look like back then it's slightly more favorable. This is Nike again. Lilly, ExxonMobil, Salesforce, Abbott, Costco, PayPal. So it does look more favorable. Yeah, I'm gonna pay attention to where it is with respect to what it is right now. So I'm gonna do this again, and you can see. And this time I'm gonna pay attention to this point right here. So it is no, right here, this guy. So currently it is higher than what it was in Q1. And in fact, most of these guys should be higher than what it is in Q1. Microsoft is higher, Amazon's higher, Tesla's higher, Google's higher, Facebook is higher, Nvidia is higher, Tencent is lower, JP Morgan is higher, the SPY is higher, Home Depot is higher, Walmart is higher, Bank of America is higher, MasterCard is around the same, ASML is higher, Pfizer is higher, BABA is lower, Broadcom is higher, Netflix is higher, Adobe is higher, Cisco is higher, Nike is higher. So everything does look like it's higher. Yeah, it does look like it's higher right now than what it was in Q1 of this year, except for PayPal. So what does that mean? Well, I don't know. It's hard to say. I mean, I think there's a lot of opportunities for this to go down, and technically we're at a pattern that suggests it might go down. So I'm just gonna go with what I think favorably, what I'm hoping for is this scenario right here. And this is the only thing I can hope for right now. It is still the stock market and these, even though overall, if you look at some of the names that aren't as, as strong, right? If you start, let me look down here on these guys, starting at Lululemon. right? And if you look at this chart, you can see they're definitely higher. Well, yeah, they are high. Let me see if it's anything lower right now than it was. Yeah, Spotify is lower. Document is lower. Workday now, they still are much higher. Overall, the aggregate or the accumulation, the aggregate, the compound, the overall, these instruments are right now, these stocks are still run is lower now than it was. Maybe except for the alternatives, right? The alternatives are actually lower than it was in Q1 or the end of Q1. So these alternative clean energy, they are actually, yeah, they're the only one that's really much lower. But the other guys, they're actually still higher than what it was at the end of Q1. And actually, the oil stock is still higher. So I think, there's a lot more opportunities for this to go down. And I don't think we have much of a correction. Yeah, I know the index isn't showing much of a correction, right? If you look at the SPY, for example, this is still, you can say this is still at an all-time high. And the Dow Jones, is still all the way up here. IWM, of course, shows some correction. Semiconductor is still really high. Of course, the Nasdaq, it's that's not much of a correction. So, but if you look at the individual stocks that are some of the high flyers, they are lower, some of them, but the accumulation of all of them, I think they're actually overall still higher than Beyond Meat isn't. Still higher than what it was in Q1. So I'm not convinced that there's more downturn, there's more correction, I mean. So it's hard to say, honestly. Overall, I think it is difficult to say based on what we're seeing here. Um, so I'll just go ahead and play this week out and see what happened on Monday, hoping for this pattern, which is a clear pattern for Amazon. Let me just take a look at the other one that I'm going to be playing is Tesla. And this is the 5 minutes, and this is the 60 minutes. Obviously, yeah, I don't know. Tesla, this is a short squeeze, so I don't know if it's gonna stay up here, continue to squeeze, or retract. I mean, it is difficult to say. If it does retract, I would expect a gap down on this guy on Monday. Let me just say if there's a gap down on Monday, like something like that, right? My expectation or my hope would be to have something like this where either it goes up or initial down and then go up, and somewhere here, maybe an overshoot. This would be where I would try to get in on going downward. Yes, I missed all of this. Yes, I did. This was like 50K opportunity loss. And I did my analysis on this and how I completely missed it because I just completely missed it on this right here. This right here, I completely missed this. Yeah, I'm still kicking myself for that. But no point in crying over spilled milk, and let's just hope this week will play out quite well.